Taking a look at the equity front, as you can see, we're down, in fact, down 2 days in a row now. Interesting news, Barclays Bank of Kenya rising around 3% today. Speculation it could issue a special dividend following the conclusion of its sale of its custody business to the likes of Standard Chartered Bank. That's just one of the stories that was driving the markets today. What else happened on the NSE 20?
I think we've been seeing IGADs gaining quite a bit. Come with the information coming in about a real estate project that's going to be built on some of its land. But we also saw some movement on equity upwards. Basically, if equity being a volatile stock, there's also a lot of people coming in today. But generally, the rest of the market was down. Mumias was down. We saw also agricultural stocks were down. So market was down. There's quite a bit of profit taking.
Okay, Kenneth, let's touch on the bond markets and just taking a look at some of the activity that we've seen there. The 10-year government bond started to trade today, and from what we're hearing, 60% oversubscribed.
Yes, it was actually issued on Monday. There were a few hiccups yesterday, so it actually began trading on the secondary market today. Yes, that was heavily oversubscribed, about 60%, which showed that when a lot of investors are sitting out of the secondary market and waiting for primary issues where they come in with excess funds to pick up as much as they can, hoping to get better yields from the primary issues than from the secondary market. Well,
just let's look at the yields and look at the rates at which these bonds are trading at. We are starting to see higher market prices. It is said that the Kenyan Commercial Bank, in fact, or sorry, the Central Bank of Kenya, in fact, is allowing bids higher than that of the market rate. How are investors taking this move by the Central Bank?
Not quite well, actually, because what that's doing is it's forcing investors out of the secondary market, and they'd rather sit with idle funds through the month waiting for the primary issue, which is usually every month, in hopes of getting better bonds. Because by going and putting money into the secondary market, you take the risk that when the new paper is issued, because the central bank is accepting the rates that are above the market, yields will be pushed up, and the papers you've picked at the secondary market will obviously be underwater.
What signal do you think this sends to the market by the Central Bank of Kenya? Do you think that it's a negative one? What does it say about the state of Kenya's budgetary allowances, and also the fact that the bond market, we've seen quite a bit of interest coming through, but of course the fact that we've seen the interest coming in higher than the market rates, this could perhaps spell less appetite for the longer dated paper?
Yes, of course, it sends a negative signal to the market, which is, I think, attributed to which attributes to the low turnover levels we've been seeing on the secondary market. And most of the activity we've been seeing is actually on the short end, with most investors trying to get out of longer dated papers as yield rates rise to shorter dated papers where the effects are less. But in all, I think it's actually sending a very negative message to the market. What it's telling the market is that the treasury is in need of funds. So, of course, as an investor, I would take advantage of this where there's demand and supply applies. If there's demand, of course, I want to get the best rate. So when I bid, I will bid above market and try to get as much as I can from the investment.
Are traders going into shorter positions at this point in time and perhaps leaving the longer dated bonds such as the 15 and 25-year paper?
Yes, in fact, I think most investors at the moment would not touch a 15 or a 25-year or even a 20-year paper. Those papers are hardly trading. Actually, trading them is next to nil. In the last 1 week, I think we've seen about 200 to 300 million trading in papers that are above 15 years, as opposed to, let's say, about 6 to 9 months ago, where majority of trading was at the long end, 10 to 25 years actually.
Well, where do you think bond yields are going to go from here onwards? Do you think it's a trend that we're going to be seeing for some time to come? And you're talking about very light volumes when it comes to the longer dated papers. Give us an indication of how much flows we've been seeing in the shorter dated paper.
Trading has not been that heavy, but we've been seeing flows of between 500 to 1 billion shillings trading, on the 1 to 10-year tenor papers. But going forward, as long as the government, Treasury, let's say, keeps up the need for the funds, we will see yields continue rising because investors will take advantage of this and will continue bidding as high as they possibly can.
All right, let's touch on the shilling, 80.1 to the US dollar, quantitative easing, the second round of that coming through in the US, and it seems emerging market currencies are enjoying gains on the back of this. What kind of impact is it going to have on the shilling, and what move do you think the central bank is going to ponder on next, given the fact that they have tried to keep the shilling at in a very tight trading range over the past few months?
The shilling actually, today appreciated, as you said, and we almost saw it touch the 79 levels, although it closed at 80. The central bank has not been in the market for the past 2 months, so we're not actually expecting them to intervene this time around. And even if they did, the market has actually deepened in the last few months, and the volumes they usually come in and do, I don't think will affect the market either way. We're seeing the shilling strengthening not only because of the quantitative easing in the United States, but also because of a lot of dollar inflows as we approach the festive season. And also, of course, some of the effects of the quantitative easing will trickle down to the Kenya shilling. And I mean, across the globe, most currencies are gaining against the dollar.